Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the CFDs on gold and we're going to be looking at our proxy for the silver market, which is the SLV ETF. Right, it's going to be a pretty quick video this, as even though we continue to update the price data every week, very little seems to change in this market. I have a bullish count which is essentially becoming more and more ridiculous as time goes by in terms of it being believable. I'm going to downgrade this today as an alternate and embrace the triangle pattern as the primary, purely because as I look at the RSI and I look at the MACD over the last few weeks now, or months even, we are just confirming that we're in some kind of triangular structure. It's a question of whether it's a B wave before a C down, or whether it's a large triangle and a wave 4 before going up. So let me just explain to you how this bullish count simply refuses to die. At the moment we have, in terms of this being already have bottomed in the primary 4, so 3 here, 4 to here, then we went 1 2 intermediate degree, 1 2 running flat minor degree, 1 2 minute degree expanding flat, 1 2 zigzag as a minuet degree, and we're not taking out these previous lows, which is keeping all of this alive. Now if I just show you why we are doing that, and I take the count off for a moment and I bring up my pitchfork, you can see that we've found support along the 38.2, first the 50 here, then the 38.2 has just been constant support the whole time, and we've just been trending up between the median line here and this 38.2 and this 38.2, and we've been channeling. Alright, so I'm expecting this to now break down at some point. If we take out the high here and this high here, then maybe it's not complete nonsense and maybe there's something to it, but I think I should rename that to alternate count now. I'm not saying it's impossible, it's just I think it's just doesn't look right. To be absolutely honest with you, it's not impossible, I just don't think it should be the primary anymore. So let's discuss what I think should be. So having confirmed I think that we're in a triangle, it's a question of what is it? Is it this? Okay. In other words, doodling on the chart again, excuse me. So this idea is that the whole thing is a triangle, A, B, C, D, E, right? And we've got one more move that needs to come down here, then we can finally get it over and get higher. I think this is perfectly valid. We've got these rising lows here, we've got these descending highs here. Okay, so that's one idea. If we look at the recent price data, let's come in on the 15 minute for a minute. We can see how, having reached the top of the trend line again, we've had this very clearly impulsive move down. This appears to be corrective, so this is likely a 1, and we're coming back up into a 2, and then we're going to go 3, 4, 5 into an A. If I show you what I mean, because we need an A, B, C, don't we? Now it could be that that's the A already done, but it doesn't quite look big enough for where I'd expect to find the E, but the E can be quite small, so we'll give it the benefit of the doubt. We'll label it 1. Let's have a look where 3, 4 and 5, that would then be A. Right, so we'd go A and then we'd go B, C. I don't know. Well no, actually sorry, we only need 5 waves down, don't we? We've already got the A. Excuse me, I'm getting distracted with the wave degree I'm in here, so let me back out so I can see what I'm doing. Right, yes, so we've had our 5 down in the A here, excuse me. Talking nonsense. 1, 2, 3, 4, 5 here. Let's change this down to minuet. I'm not overly labelling it since the structure is pretty clear overall. This was an ABC here. 1, 2, 3, 4, 5 flat, and then a 5 there as well, so label this. I think that's going to be a flat, expanding flat into the B. It looks like it, and then this is now going to be probably 1, 2, 3, 4, 5 down into the C, into the E, into the 4. Now, it is a small probability that we've already completed. That there's a tiny zigzag in here for the E, but I don't think that's right. I would expect to come down lower here. So that's how I see that count. I think we've got some more work to do. You know, it's just like, why wouldn't you just give it up already? Get on with it, please. We've got this obvious impulse down here, corrective move to come. This is probably going to have to come back 50 to 61%, you know, before it rolls over. Just trying to draw in some more liquidity, get people bullish. I think that's all it's trying to do. You know, come here, come to here, then we can come to here, here, and here, and get this done into the E, and we can go. Now this could be impulse or the alternate motive of a diagonal, so we could have something like 1, 2, 3, 4, 5, and get the C of the E in of the 4. We could get it in earlier potentially. I mean, there is support on the way down here, right? We've got the 50, we've got the 61.8, we've got the 38.2% retracement, we've got the trend line, we've got the edge of the pitchfork. If we came down this low, that would invalidate the count at that point, and we'd be looking at the bearish option instead. But until you take out this C wave here all the way back, I will read out the price, as I'm often being accused of not doing it often enough. Let's just put an invalidation point here, price of 16.80. And we'll lock that in place, and rightfully so to point out, because I know some of you are on mobile devices and can't necessarily just see the screen, and don't necessarily have the luxury of staring at a huge 4K monitor with multiple other screens, so, you know, fair enough. This is bullish triangle invalidation. Okay, I'll keep that down there. And lock that line in place as well. Okay, so that's one count. Right, let's just get rid of this pitchfork for a minute. Okay, so A to here, B to here, C to here, D to here, A, B, C to come to here to finish the E, and then we get, if we go beyond where the C was, that's no longer a valid bullish triangle. So we're looking for this final zigzag to play out. Okay, if for whatever reason we've already bottomed, okay, and this here was a very short and sharp E, that's what I meant by having potentially bottomed, then we've got a potential impulsive count coming out of here. If that was the case, we'd break this high, and then subsequently the B as well, the D and the B would break, and we'd be on our way out of here. I don't think that's particularly likely. I'd rather lean into that for the moment, but if we do break these highs, I will just label those as well. See, I don't know why I keep doing that. I already know the hotkey just to hold down the control. Once you're at where you want to be, it doesn't always work, that's why. You have to zoom in, be able to see what I'm looking at here. Gotta get right to that point. Why can't I get it right on the point? There we go. Yeah. So a move above this high here would make us suspicious that perhaps we'd had an early completion to the triangle, or even our alternate bullish count, the count that was the primary, we've now downgraded into an alternate, is actually correct. So there you go. A couple of levels to observe over the coming week. I'm still expecting this upward resistance to give at some point, come down and complete this pattern. So on that note, let's look at the bearish triangle instead. So we'll add these to triangle 2, turn that off, and we'll add all this lot as well to that triangle, since that's all relevant to the price. Okay, there we go, get rid of that, and then we've got our bearish triangle. So here's an alternate idea. This has us down in an A wave. I struggle with this horribly, but I can just about force an expanding diagonal into here. Okay, but it's not pretty, but I can get it just about into an A. We then have A, B, C, D already in E on this upper trend line. So this will now be 1, 2, 3, 4, 5, 1, A, B, C, 2, and you see how this will just be a larger impulse, 3, 4, 5, and it will come down to find the wave C, my target around 1455. Okay, so essentially if the bullish count, the bullish triangle interpretation breaks down by going through the invalidation point of the C, then this would be my preferred choice after that. I think we were looking at A to B to C all the way down here, and then this would be diagonal, this would likely subdivide as an impulse. Just to, I mean, you don't have to have alternation between impulses, but it's part of a broader correction, so alternation would look nice here to come down, and that gives you a 1-to-1 of C equals A and the joining B wave triangle. So take out this low here, which is the C in the bullish triangle, B here in the bearish one, and yeah, I think we're probably flushing down lower. So we've already pointed out that level, that is the A1680 level. So basically all these previous lows, which are all within a dollar or two of each other, right, break this base of support here and it's trouble, right? We're heading lower. There you go. Alright, so that's really all I've got for you of gold at the moment. We've downgraded our count, so I'm going to remain on the bullish side for the moment, since I think we are in a larger wave 4, and we have been wasting time. So let's just have a look at how that pitchfork fits in. Okay, so let's take our bearish triangle. Right, that's all the way down here. Now that's if we went 1-to-1. Now it doesn't invalidate the count, the longer term count, which I'm going to have to fish through to pick out the pieces of the bullish count and separate them now that it's no longer the primary. I'll do that in time for the next time I cover gold, as soon as I can find where the bloody hell I put the thing. There it is. So that's the alternate count. All I need to do is hide all this lot, pick it all out, put it in a separate folder, and we can have that as an alternate, and you keep all of this run up as the same, because that's what I think is going on. 1, 2, we're in 3, done 3, we're in 4. Okay, so the bearish count seems a little too drastic for a wave 4. Very drastic. So I would be tempted to relabel the whole thing at that point and reconsider the top, if this is a huge 3-wave move all the way down to here. So I'm going to, for the moment, I'm going to say this is our primary count now. Just upgrading it and downgrading the previous one. Bullish triangle. The only reason I'm favouring that is because of the support we seem to have at the moment. Now that could break down, but it depends where you draw the lows. Even if you put it there, right, we've still got plenty of room to come back down for another test and still get that triangular form. You could argue it feels like an adjoining part, so that's a very, what's the word, tentative primary choice. I'm still quite torn, to be honest, between that and this. I guess we'll have to wait and see now. Take out those previous high, take out these previous lows. We're stuck in a triangular range. We need to make a decision, and it will make a decision sooner or later. Alright, so that's how I see gold for the meantime. I think we're in a triangle, still going sideways. Identified the support that's holding us in place. Let's have a look at our moving averages. As you'd expect in a triangle as well, they're all coiled together, sitting around and back and forth around one another. That's perfectly normal. Yeah, so it's going to break one way or the other. Is it an adjoining triangle and it's done? Right, and now we're going to break down. I mean, we don't have to go 1-to-1, do we? You know, we could go 1, 2, 3, 4, 5, edge of the pitchfork, and just have a smaller C. It's still gone beyond where the A would have been. A, B wave triangle. So it's not necessarily the end of the world if you break these lows, but we are going to have to go lower if we do. And we'll wait and see if this support holds. Alright then, so that's gold. Let's save the chart. Let's move on and look at silver. So as I pointed out the previous time I covered silver, we'd come back up here, and I was saying how I was expecting another move lower because I couldn't get a bullish low with this being a 1 and a 2. I saw this as 3 waves again into an X, and then this was an impulse down, and this is a 3-wave correction, and now we're going to continue our impulse down in a zigzag. That's still possible, that we've got A, B, and we've got C to unfold, heading for the 66 and all this previous resistance which now becomes support, filling this gap as well on the way down. That would all be hunky-dory, giving us a cheaper silver to buy, right? In what will be, this is primary wave 1 into primary 2, primary 3 going higher. So I still feel we've got lower to go. However, there is an alternate way of getting down here that I'm starting to like the look of, and it basically brings it into line with gold a bit more. Now we don't seem to have the same support in the RSI or the MACD for this idea. So I'm just going to put it in as an alternate idea, which is the X isn't in yet, and we're going to waste a bit more time in the X by producing a triangle as well. So our X would go from here and it would come over to here, near probably the edge of the channel again, and we're doing something like this. We're going A, B, C, D, and the E is going to be back here at the edge of the trend. X is here instead at that point, and then everything's probably just going to take a little bit longer, and we're going to come down in 5 waves out of the X wave triangle to get our completed, this will be a completed zigzag. So interesting how whether or not we do it the long way or the short way, really, at the end of the day. So let me just clarify that. I think for another full zigzag in the Z, we're going to need a slightly bigger amount of space. So let's get this right. Oh, clicking on the wrong thing again. Right, so here's our ABC, W, WXY, X, ABC. This is our first zigzag. Right, so actually, no, I can't do that, can I? Right, I'd have to have another full zigzag here. This is our first zag, ABC. This becomes an X. So yeah, I would then need another full zigzag down, not 5, excuse me, 3 more to get the Z. I guess that's possible. So we'll save that, what we just put in, which is polygon, these trend lines here, X wave triangle. Hide it because we've still got the possibility of being complete, right? And this is the start of the zigzag, in which case coming to the 61 seems to make more sense. Yeah, I'm going to leave it back there at the 61. We fill all these gaps, we repair all this damage without having to go all the way over there to do it. So yeah, let's just stick with a simple zigzag. Zigzagging's here and another zigzag down here. So this is 5, this is 3, and this is going to unfold as a 1, probably come back a bit more, 2, 3, 4, 5, and that'll be correction complete. Primary wave 2 done, big buying opportunity off into wave 3. Same again as we were looking at in gold. If we take this B wave high out here, these highs, let's just put a price on them, 22.82 ish. Take out this high with more recent price action, and we've got to reconsider what we're looking at here. But it feels and looks like it wants to just get down here, get some kind of proper termination complete, and then we can finally get moving in an impulse. This has been a very long and time-consuming correction. I think we are well into when did it start? 10th of August 2020. All right. As of today, we're now 546 days into this thing, so it's taken a fair old while. It definitely feels long enough to be a primary wave 2, right? It does not convince me in any way, because of our inability to get a diagonal out of here that we've already completed, plus we got this lower low, so we couldn't have called this a double bottom, and I don't see any way of getting an impulse down from the top here that's unfolding. So the whole thing looks like a big 540, 30 day, whatever it was, correction that still isn't over. So a bit lower to go, come down here. I mean, if we just take a look at the volume profile, right, and where the bulls are putting up a fight, so it's all around these lows here. Right, so let's we've got a support level going on. Let's copy that, place another one across those lows. So as you can see, this territory here, this low, we've got the top of this gap here. Got these previous lows as well. We will break it, I think, and flush down pretty violently, I'd imagine. But we're kind of determined from a trading perspective at the moment. Traders are determined not to let go of this place, and that's because there's absolutely nothing between us and a big drop. You see, the volume profile is completely empty here. So I think that's what we'll see, even if we take in more and more visual history, like taking loads. Right, until we get back to this chunk here, we got nothing in the volume profile. everything since bottoming all the way back at these lows in 2015, 2018, and then finally 2020. Take them off the screen, or take that prior period off the screen, you've got nothing here in the volume profile. So I feel like if you break this high and all this support here, you should have a nice quick flush down, and that would fit, because if we've got an A, B, nice vibrant C, get down here, feel like we may already have a 1, 2, the 3 would accelerate, 4, 5 within the C. Get us down here into all this noise, all this volume, the 61.8% retracement, fix the gaps in the chart, and everything looks a lot better. And I think a flush down to these levels would scare off a fair few of the bulls and the people who brought into the SLV rush back with this X-wave high back in January 21, and that might get them capitulating and finally throwing in a towel, which is the perfect opportunity to come in and buy the market. So that's all we're really waiting for. Let's have a look at, so we've got some higher lows in the RSI, but then again we've got higher lows in price, so that's nothing particularly positive there. We had some bullish divergence around the lows here on the MACD from prior lows and lower lows, but nothing particularly convincing. How are we from a moving average perspective? Starting to coil up again, come back into that 250, the green line being rejected, come back into it again, being rejected, still below the 10, the 20, the 60, trading around the 20 at the moment. So if this is A done, B, let's just project and see how well one-to-one relationship lines up. Right, so the one-to-one only puts us down here. That doesn't quite look deep enough to me. So either we are going to waste more time in that triangle, or we're just going to get a more extended C. So it's going to be A, B, and a slightly more aggressive C, because I still feel the best target is down here at the 61.8. Now let's have a look at how the 50 looks from below. Right. Just want to take the actual dominant high, this orthodox high for the Elliott wave count, rather than the swing high, which is the dominant high. And we'll just label those two supports. Okay, so we can just get them off the chart. Change this back into 50 in golden. Yeah, it's right down here, isn't it? It's right in amongst all this. Volume profile, 61 and 65. I think I've taken the dominant high actually there. I must have done. Yeah, there you go. It's all this horizontal support, right? Right on the 60, all the way back to this formation back here in 2009, this low here in 2013, this high here in 2015, these highs here in 2017, these highs here, what, that's in August 19 and February 21. All of that structure is just screaming to get tested. Just come down, test all of this, find the golden ratio, and then we've got a pretty savage pivot, golden corner pocket as some people call it. I've heard some of the traders on my Discord call it that. I'm not quite sure where they've got it, but I like the phrase. And there you go. So if we do get that into the golden ratio here, back test all this support, then you've got an 80% probability of making the median line, but I would argue it's going to be much more aggressive and more powerful than that. So can't put that pivot in there until we've got a confirmed low though, so let's just leave it at that for the meantime, guys. We've got more downside to come. If we take out these highs, we can come back and have a rethink about what else is going on, but still leaning towards lower pricing in the gold and silver markets unless the price proves otherwise. Alright guys, thank you for joining me on this technical analysis of gold and silver. I hope you've enjoyed it. If you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Thank you as always to my Patreon subscribers. Your support is greatly appreciated. In case you're watching this video now, the live stream will be tomorrow, Tuesday, at 12 o'clock rather than on Thursday at 1 o'clock. I've got a busy week coming up, so I'm just going to have to try and get it done when I can. If you're interested in joining in with that live stream tomorrow, then you're going to have to sign up to the Patreon. There's a link in the description box below. Tier 2 and Tier 3 provide that privilege. If you're interested, have a read, see if you like it. Feel free to sign up. Or don't if you don't want to. Also, if you're not following us yet, on Twitter, there's a link to my Twitter in the description box below as well, and I always post on there whenever I put up a new video on YouTube. Alright guys, take care of yourselves, and I'll be back with you later in the week. All the best. Bye bye.